आज हम एक्सचेंज रेट को देखते हुए ये बताएंगे कि एक्सचेंज रेट के क्या मायने होते हैं, जिसका कोई भी माइक्रो लेवल से सरोकार नहीं है और ये मैक्रो कंसर्न है। और बाय चांस भारत सरकार भी सिर्फ मैक्रो कंसर्न से है, क्योंकि क्योंकि जो हेडलाइन फिगर्स हैं वो दुरुस्त रहनी चाहिए। India is the fastest growing economy. Yes, it is true. We have a low inflation. It is true. But what about the unemployment? And what about the malnutrition and hunger? I will uncover all these things. Just wait and see. The exchange rate has slipped down to 91 a dollar, but it is not troubling the government, and there is no anguish also from the public that why the rupee has slipped to 91 a dollar when it has breached the level of 52, 53, and it was in 2013. Then definitely the inflation had gone up. The government was giving subsidy on the diesel, and petrol prices were based on market rate in 2008. So lot of subsidy was being given. The prices were expected to rise. Inflation was high because of the crude prices, 130 barrel per dollar. That time the government was expected to, RBI was expected to have enough of the reserve so that RBI could have intervened in the market, in the exchange market, and stabilize the rupee. But how much you can outflow is so serious. That is, the capital outflow is so serious. It was difficult to stem the slide in the rupee. Still, whatever little efforts were made, the the prices had climbed up and inflation was very high, touched 7%. But this time, you see why the rupee has gone down to 91. Two or three things are happening simultaneously. One, that is the capital outflow is acute. The Indian stock market are not as attractive as other emerging markets. The second is that export of roughly $90 billion, which was expected to go to United States, has been hanging in fire for a long time, and we are coming closer to this financial year, and it will not be possible to clear the export to United States, though few more markets have been identified like Oman, New Zealand, Australia, and there it will have to be seen that what type of trade it will be there. It is a big topic. So for the time being, 6 to 7 items which used to be exported to United States every year are held up because the government could not strike the deal with United States. The deal was that India should stop buying the oil from Russia, which is available at the discounted price, and the market price was fixed at $60 per barrel. Still, it is getting the discount of eight to $9 per barrel, sufficiently weak. But the pump prices have not been reduced. The government is buying roughly 32% of the oil from Russia. Remaining, of course, is coming from Middle East, Africa, and United States. United States imposed a penalty of 25% that if India will continue to buy the oil from Russia, but the government did not pay any heed. They continued to buy the oil from Russia, and finally, the export was held up, except two or three items like pharmaceutical, where import duty has been attuned suitably because it is the absolute requirement by the American. Few items are exported, rest other are held up. So inventories are building up. I will touch upon that how it is affecting the economy in the short term. Now, the exchange rate is at 91. It is not troubling because the international oil prices are benign. These are at 60 to 62 barrel per dollars per barrel, and from Russia it is coming at $51 per barrel. Because Russia is under stress, United States has imposed a sanction on Russia. Sanction, you understand, that the Russia will cut off from the transaction made in the dollars. Payment or receipt will not happen there in terms of dollars. This is the meaning of the sanction, as it is happening in Iran also for the last 5 years. And the protests are there because the people are facing hardship. The currency is just flowing like a water. So what exactly it means? That Russia is expected to sell the oil so that it can manage the economy and it can manage the war very well with the Ukraine. And the Trump administration does not want that Russia should continue to fight with the Ukraine, because Russia does not want that the Ukraine should join the Western Union, Western Europe, and it should continue to be there under the regime of that is called Eastern Europe. There are certain benefits with the Western Europe the Ukraine is thinking of, but the war is going on. Russia wants that the Ukraine should not move away from this particular league of nations where Eurasia and few other countries are also there. Anyway, this is the point of contention, and the Russia is expected to sell oil and few more commodities so that it can manage the economy, and it is a big economy with a lot of raw resources. So therefore, India, China, and Brazil are buying the oil. No doubt, China is also buying oil. There is no penalty on it. The maximum tariff on China is 29%. It is because that US is dependent on China for a variety of reasons. One, that the rare earth, where China has got hegemony, so rare earth are needed everywhere all around the world, because from semiconductor to defense to technology, these are needed, and China is expected to supply these rare earths to United States. So therefore, some bargaining is possible, some negotiation is possible, tariff adjustment is possible with it. India does not supply very necessary goods to the United States, and therefore Trump coming down is not possible at this juncture, because they can manage with four or five other items, even if the export is not done by India. But the tariff has been increased to 50%, 25% was the penalty. Now it is likely to touch upon 500%, that India will be completely cut off from the export to United States. 500 tariff is not at all possible that you can push up the export to United States. And at this short juncture, short time, the diversification of the export to different market is not possible, because the foreign trade free trade agreements are bilateral trade agreements are being signed just during this period, and the items which will have to be traded between the different countries with whom FTA has been signed also depend whether these are the same items which are expected to be given to the United States, or these are the different items. So therefore, export is putting up a strain on the exporters, those who have created lot of inventory, but at the same time they are not able to recycle them, the inventories, and pay for the loan taken, or pay to the importers, or whatever, pay the wages also. So this is not bothering, because for this year the export has contributed whatever to the growth. Inventory has been piled up and growth is shown to have taken place. Only 0.2% growth will be missing when United States will not take the export from India. So under this situation, the United States, which may be at loss or which may be benefiting from somewhere else, we do not know, but India is a loser, because these industries will remain half working or semi working till these export are thoroughly cleared. Now, since the export was not possible, the rupee slide has quickened to 91. Otherwise, it could have stayed at 88 to 89. The rupee is sliding from 84 a year before to this level, because there is an outflow of the capital, and inflow, as I have told, is not very encouraging, due to the reasons that the Indian stock markets are not found to be very attractive as compared to the other emerging markets. So money from the pension funds and other funds, mutual funds, are going somewhere else, not coming to India. Therefore, the weakening of the rupee is there. Weakening of the rupee is not bothering the government, because the inflation is well under control. The even the market rates, which the government, international rates which the government is paying, companies are paying for the oil purchase, are not passed on to the consumers. Rather, lot of cess is being charged, with which the government is building the infrastructure every year. Otherwise, economy will fall drastically. It will lose 2% points from its growth if the public infrastructure is not there. Public infrastructure is good only in some circumstances, but it cannot substitute, it cannot crowd in the private investment. The private investment, in fact, is always needed, because it is calibrated to the return, and the sectors where the investment is needed. Here, public infrastructure the government will build, and it is uniform all across. Like the railways will be built, airports will be built, and some infrastructure, social infrastructure, like All India Institute of Medical Sciences, and some institutions can be built. Roads, of course, are there. They are taking the lion's share. Now, with this particular situation, the economy, in fact, is growing at 7%. Inflation, as I have told, will remain benign because the international prices are not very warm. They are just moderate, and rather the government is collecting so much of the taxes out of the low prices. In this situation, the growth rate has come around 6.9% or 7%, which in fact is shown as very credible that the government in fact is is pushing the engine of growth to 7%, and it is the fastest growing economy. But beneath it, in between the lines, you will see that there is a trouble brewing there. The government is was not expected to take so much of the taxes when the international prices are so low, because the global growth is slowing down. Therefore, the oil prices are also cheap. The government should have passed on the benefit, that is the low prices, to the people, though those who could have spent more and could have done the saving. By chance, the saving rate among the lower household is also very low, due to which you will see that the non-banking finance companies and others are still charging 2% extra rate of interest from the other banks. The reason is that the saving is very scarce, and the demand, if it is there from the small industries, then the rate of interest is required to be roughly 12 to 13%. At this rate of interest, the manufacturing enterprises cannot work successfully, because these are viable at only 9%, 8% rate of interest. Having said this, the the investment in small industries is held up after pandemic and demonetization, because before that we had lot of unorganized sector, that is the industries employing one or two persons were managing their affairs. But this pandemic and demonetization and subsequently the GST has shaken the base of the unorganized sector, and it is the organized sector which is delivering the growth. The 94% of the people are working in the unorganized sector, and only 6% of the labor force is working in the government, in the organized sector. With this particular kind of situation, and GST has become compulsory, it means the unorganized sector, which is not a frictionless sector, cannot survive in this environment, because the GST on input and output, every time the GST will come into play, the industries simply have stopped working. But 94% people are dependent on that. In this particular situation, that is the growth rate which comes from the organized sector, because national accounts capture only the organized sector, and there is no way of capturing the unorganized sector. So it is just extrapolated on the basis of the what the growth is coming out of the organized sector, and it is projected, and still it comes at 7%, but the growth rate is nowhere close to 4 to 5%. 2% overestimation is there, and this suspense has been raised by the IMF also, who has already reported that the national accounts are given grade C, grade A, grade B, and grade C. It means the surveillance by the IMF is not difficult difficult, and when it will surface up, then it will show that the growth rate has been shaved off from 7% to it will come to 5%. But for the time being, the government is interested in revising the base year from 2011 to 12 to 22 23, so that the growth rate which is shown at this point in time should remain as the base period, and then the growth which is picked up will be somewhere around 6% or 6.5%, and nowhere close to 7%. Now, when the inflation is benign, everyone knows that for growth, the monetary policy is called into vogue. The monetary policy has cut down the interest rate by 125 basis points in the last 1 year, and due to which there is some effect on the growth also, because the credit is cheap, EMI is reduced, private sector can also borrow funds for any purpose, as well as the importers and exporters can also enjoy the cheaper rate of interest and can add to the growth. How much growth would have been added in this particular time? But it is as per the rules of economics that when the inflation is low, there is a need to push up the growth because the demand goes up and therefore the growth goes up. So some relief must be there on that, due to which the growth rate has turned out to be 7% on an average for this year. Similarly, the government has reduced the tax rates also, and changed the tax slabs also in the beginning of the financial year, and also GST slabs have been reduced from 4 to 2 only. So that have also a significant effect on the consumption, and these taken together has added some growth points, and must have been only 0.8 to 0.9%, because the growth rate at the given state of inflation was 6.4% when the budget was presented on the 1st February 2025 last year, and now it is coming to 7%, or it could be little higher. So the benefit of 0.9% is there. Now, fiscal policy or monetary policy cannot deliver the growth rate more than this, because there is a cap on the consumption. There, the consumption is not graded from top to bottom, and therefore the upper few have the advantage of enjoying the taxes and buy the big ticket purchase, due to which there is a benefit of some purchase to these people in the upper rung of the ladder, not in the lower rung of the ladder, because at lower rung there will be an unorganized sector, there will be no salaried class, and in unorganized sector, unless there is a spurt in growth of agriculture or manufacturing, the wages will not improve, and when the wages are not improved, the purchases are not possible. When the purchases are not possible, they do not contribute to the growth process. This is called exclusive growth, not inclusive growth. When the growth is not inclusive, you will see that the malnutrition is increasing day by day, hunger is also increasing, and the government is still sticking to providing ration to 81 crore people. The reason, in fact, is this. Otherwise, the people will starve and hunger will be too drastic, which will result in a very terrible situation that will expose the government. So, therefore, you will see that the unorganized sector, how it is surviving and what is their income, what is the income of the gig workers, and the workers which are not properly skilled, how much they can take, anyone can imagine. It is only 6% of the people, out of which 2 or 3% people are paying the income tax, and rest other are not eligible, are not do not come in the bracket of the income tax, and therefore they are keeping away from that. Only 2 crore people are paying the income tax. Under this scenario, you will see that the burden of the healthcare and education is rising, but the government is cutting down the expenditure on education and healthcare, or rather, it is static at a very, very low level. So, due to which the morbidity is increasing, the mortality will increase, and also infant mortality rate will continue to be moderate to high, and maternal mortality rate is also very high. The government is keeping it aside because the demographic picture is not allowed to mix up with the economic sector. The economic performance is judged from a different angle, and its delivery also come from the different means, not the demography is to be crossed with that economy of the general economy of the country. Let the micro situation be anything, but the macro figure should not be less than 6% or less than 6.5%. This is the only range which it can do. Now, when the inflation was benign, the RBI has reduced the interest rate to allow the growth to move up. But at the same time, if it does not alter the interest rate and allow the exchange rate to remain at one level, that will also lead to capital outflow and capital inflow. That will depend upon how the stock market are working. So, under this situation, the growth rate is to be controlled at some points, and maximum push should be there. So, therefore, the exchange rate has not been disturbed, has been sliding down. At it has breached the level of 90, and it is 91, and it is not harming the growth process. Otherwise, if the RBI start intervening to bring the level of rupee at some fixed level, then definitely it will have to sell the dollars and suck in the rupee liquidity. Once the liquid liquidity is sucked in, then the money supply will reduce, and the money supply, as you know, hurt the growth process. So this it would have not done. So in this situation, the RBI is not intervening, and RBI wants let the growth process go on. Let the inflation be determined according to what is the core inflation and what is the food inflation, and therefore there is no need of adjusting the exchange rate because it is not troubling. Oil prices are cheap, and China import is very essential. That is roughly $100 billion worth of import is being done from China, and it is paid in terms of dollars. In terms of dollars, but here the current account deficit with China is is little high. It is moderate to high, but overall oil is not troubling, and therefore there is no reason of inflation because manufacturing products do not add to the inflation coming from China. This is the reason that the RBI will not intervene in the market to bring the level of the rupee to some fixed level where the inflation is reduced as much as possible. But the question is that why the government is not giving the relief of the reduced prices of the oil to the consumers is that the domestic investment is slow. The domestic investment has fallen by 10 percentage point. The reason is that the consumers have very poor income, and their saving rate is also low. Due to this reason, that the government will have to drive the economy, drive the public infrastructure by allotting the maximum possible. When it will fall short of, because the nominal growth rate at this time is going to be only 9%, definitely it will have a dent on the tax collection. Tax collection is dependent upon the monetary GDP, and as such, it will suddenly be hit on the lower side, and then the government is not expected to increase the fiscal deficit, because the fiscal deficit also shave off certain amount of interest, and the primary deficit remains high. So with this scenario, you will see that the growth rate, in fact, will continue to be at 7% unless the private investment comes. The private investment will come from, that is from the structural reform. The land, labor, and capital reforms are still awaited. And since the government is trying to become politically sound in all the states of the country, after winning Bihar and now just flexing the muscles for West Bengal, then it will be seen whether there will be a yes from all the states that these structural reforms are needed, because the labor reforms and the capital reforms and the agriculture reforms demand the lot of majority in the parliament. Majority vote is required to be there, and therefore the government, in fact, unless it has got adequate number of seats in parliament, upper house and lower house, then the bills cannot be passed, because these are the capital reform bills and these require the majority voting. The majority voting will be there only when everywhere the BJP will be there, and then only you can pass any difficult bill. Like the agriculture reform bill, it was passed, but it was withdrawn. It was rolled back after 2 years when the protest was so high. But for the sake of UP election, it has to roll back. The rollback has caused a damage to the Indian economy. Otherwise, there would have been a spurt in the growth rate by 1% and 1.5%, but it could not do it. Some reasons were given and the government was agreed. Similarly, the land reforms are not possible at this juncture, because some of the agriculture states are not ready to part with their land. The land, in fact, is giving the livelihood to the people, marginal farmers and small farmers, which are roughly 80 to 85% in the country. These farmers, in fact, survive on the one piece of parcel of land, and they are the source of livelihood, which will be hard. And when the government will have maximum BJP ruled states, then definitely it will be easy to do the land acquisition, because these states can vouch for that the land reforms are necessary. Land reforms will give the land to the people, to the industries and enterprises, so that the scale of operation goes up, the economies of scale are reaped, and the benefit of growth is available to everyone. And at that time, definitely the skill development, which is not picking up, without any growth, any visibility of entrepreneurship, so that skill development are not that much fructifying. But once the government, in fact, will have the land acquisition, and simultaneously when foreign investment will start taking place even in the manufacturing sector, so then only the growth will be there. For the time being, the growth is sticking at 7%, because there is no aspirations for the structure reforms to take place. Even the labor reforms which have been done are yet to be vetted by the states, and then only it can have sweeping changes. Similarly, the capital reform, the banking sector, which is not encouraged to do the lending on free run basis, it is just trying to see whether the project are viable or not, because ascertaining the fate of the projects which are viable or not at the time of the sanction is not a easy thing. Only when these are found suitable, when they start working, then only we can say that they are viable and their return is very good. Repayment will be there. Otherwise, the non-performing assets are very high. So there is a very cautious lending, and under this cautious lending, the capability of the public sector banks is not that strong that they can sanction the projects without assessing the viability on the paper. So therefore, the privatization is demanded so that the capital adequacy does not become the problem, and the government securities, which in fact are contributed by the public sector banks, will also be under stress. The yield will go up in that particular situation. So it is also the particular it is also the reason, political reasons, that the capital reforms are not easy to be done in for the time being, till there is a very good strength in the parliament, both houses. For the time being, one should agree to 7% or 6.5% growth rate. But as I say, that this growth rate, first of all, is not inclusive. If it is inclusive, then the problem of malnutrition will not be there. The problem of educational standard not going up will not be there, and other the basic social requirements will be also kept in a sunny mode. The things will not be that disturbing as we are facing. So this growth rate is inadequate unless there is a unless the animal spirit in the manufacturing sector is unleashed. Then only the employment generation will be there, and then only the education standard will go up, and long term you can have the growth rate of 8 to 8.5%. But for the timing, what the government can do is that investment in agriculture is required to be there so that the productivity goes up. When the productivity will be high, then the manpower from the agriculture can be displaced and can be employed in the manufacturing sector. That will be a different kind of situation, that when some sector is working, definitely the other requirements will also be taken care of. Simultaneously it happens. It is not that the skill is given today, but it will be used after 6 or 7 years. The skill is to be currently updated, and similarly, some industries should be attracting this skill. Then only it is advantageous. Uh, Therefore, what I say is that don't be befooled by the fiscal and the monetary policy. These are the ad hoc measures. These work on the short term basis, not on the long term basis. In the long term, the government is expected to do some structural reform so that the economy can gather some points and the economic efficiency is increased, technology is advanced, and so many other things. Human development index will also improve when structural reforms will be there. Thank you.